The Exxon Mobil began when the John D. Rockefeller Standard Oil was established. The federal government's ordered Standard Oil to split into 34 firms, two of which became Exxon and Mobil in 1911. The Mobil oil trademark was first used in 1920 when gasoline output surfaced, corrosive production due to the booming vehicle industry. In 1972, Jersey Standard changed its name to Exxon Corporation. The worst company accident in Exxon history occurred on March 24, 1989. The tanker Exxon Valdez aground in Prince William Sound in Alaska. Exxon acquired Mobil in 1998 for $73.7 billion and formed a new corporation called Exxon Mobil Corporation. There is vision and mission Exxon Mobil Corporation Company. The vision is Exxon Mobil wants to be the world leader in all aspects of oil production while creating a safer and cleaner environment for everyone. Meanwhile, the mission is Exxon Mobil Corporation is an environmentally conscious, high-quality energy company, competitively priced, using technology to find a cleaner and safer alternative to provide energy to the world. This is the financial ratio analysis of Exxon Mobil Company based on balance sheet and revenue table 2012 from textbook case study. The current ratio of Exxon Mobil is 1.01, which indicate that Exxon Mobil Company is still able to pay off its current liability of its asset of the end of the year. The debt to equity ratio is 0.9, which indicate that the Exxon Mobil is facing a very high financial risk. Then the quick ratio is 0.8, which indicate that it has a no liquid asset to pay its current liability and should be treated with caution, and the value also under current ratio. That means current asset heavily depends on inventory. Next is the return on equity is 0.26, which indicate that the Exxon Mobil is less efficient usage of equity capital. The net profit margin is 9.64%. The net profit margin is 9.64%, which indicate that Exxon Mobil is pricing its product correctly and it exercising good cost control. The structure in the organization is made to run the company according to the duties and function of each position. Exxon Mobil Corporation has put together a remarkable organizational structure based on functionality. Each line of the organizational structure is responsible for overseeing the target operating group. Exxon Mobil functional structure strategy is through the focus of several refineries into regional cluster, as well as giving the company enhanced operation and maximizing supply. Most of the power is given to the chairman of the board and chief executive officer to manage the organization, while the board taking the initiative and function independently in the most of vital matter affecting the company. Next, the Vice President and Chief Finance Officer who are responsible for managing the financial action of a company. Besides that, Vice President General Counsel to provide legal advice to the corporation. Furthermore, Vice President Strategic Planning, which creating specific business strategy, implementing them and evaluating the result, executing the plan in regard to a company overall long-term goal or desire. Other than that, Vice President for Human Resources who work with the company CEO to strategically plan HR initiative that will benefit the company and encourage more efficient and beneficial work from employees. Lastly, Vice President Investor Relations upstream, which play a role in investor relations. Exxon Mobil has penetrated multiple international markets, for example China, India and Russia, plus recently diverse their downstream business in Argentina, Uruguay, Paraguay, Central America, Malaysia and Switzerland. In 2012, Exxon announced restructuring of their downstream holding in Japan. Exxon is nearing completion of new units and improvement of existing facilities in Thailand to refine lower sulfur diesel and gasoline to meet new Thailand specification. New plants are also in the construction phase in Singapore, Saudi Arabia and China. Based on the table IFE matrix of Exxon Mobil, the higher weight from the strength part is 0.10, which come from the factor of Exxon produced about 6.3 million barrels of oil daily by operating over 37,000 oil wells in 21 different countries and reported net income of $45 billion in 2012. This factor give the high influence Exxon Mobil's. The lower weight from the strength part is 0.04, which come from the factor growth of Exxon lubricant business and Exxon Mobil, the largest petrochemical company in the world. These factors have a low influence to Exxon Mobil's strengths. From weakness part, the higher weight is 0.06, which come from the factor the structure of refining business as part of the downstream SBU at Exxon. This is the major weakness for the Exxon Mobil. Then for the lower weight is come from notable oil spill in the last 25 years that hurt the reputation, downstream revenue account, and declining of earning for the chemical SBU from both 2010 to 2011 and 2011-2012. These factors only have lower effect on Exxon Mobil performance. Lastly, for the weighted score of IFE metric, the value is 2.98, which indicate that the Exxon Mobil have a strong internal position because the weight score is higher than 2.5. Exxon Mobil Corp is the largest and most profitable oil and gas company in the US and one of the largest company in the world. Among Exxon's main competitors is Saudi Aramco, which is one of the largest company in the world across all industry, as well as among the very largest global oil company by revenue. Next, British Petroleum, which is oil and petrochemical company that operates upstream, downstream, and renewable business. Other than that, Royal Dutch Shell, which is another major integrated oil company. Last but not least, Sinopec is the producer and distributor of a variety of petrochemical and petroleum product. Lastly, oil and gas company PetroChina that engage in oil product exploration, development, production, and sales. The key external analysis is made up to 6 factors that influence the oil and gas industry and how intensely it affects the firm. The demographic factor is low because every age, ethnicity, race use product from oil and gas, everybody use it, so it show low effect to the firm. Economic factor is high because economic instability directly affect the demand and price of oil and gas product. The political factor is high because the unstable relation between nations can result in uncertainty of energy supply. Next, we have social and cultural factor and this is another high factor because the stakeholder pressure will drive the corporation to act more ethically towards the environment. Technologically factor is high too because the innovation in the industry result in more efficient and cleaner operation that competitors will use to get ahead. Without technology, the company will fall behind and cannot be sustained enough to compete with another firm. Environmental factors are high due to increasing globalization and rapid demand causing environmental pollution. Industry competitors must act ethically to promote a clear future to be sustained in the long run. That environmental factors are high as the industry causes a lot of pollution. The higher weight score is 0.28, which is number 3. It means the opportunity give positive effect to the company. The lower weight score is 0.09, which is number 2. It means the opportunity give negative effect to the company. The higher weight score for trade is 0.21, which is number 2, 4, and 5. It means the trade give negative effect to the company. The lowest weight score is 0.04, which is number 9 and 10. It shows that this trade give positive effect to the company.
Okay, thank you to the first presenter. Now I will continue the presentation. For the strategy formulation, the Exxon Mobil used the SWOT analysis. Okay, for the strength, Exxon Mobil has a strong brand ranking, a diversified portfolio of product. Their strategy with research and development and is really going good for them. They have been either first or second in the last 5 years in terms of the race to be the biggest, best competitors. They also have a large geographic presence. And for the weaknesses, the operation for Exxon Mobil create major pollution and the product lines are very mature. The oil and gas industry have been around a long time and eventually it will be overturned by other ways of energy. There is also negative publicity, especially from pollution, and they are in high debt. Okay, for the opportunities, Exxon Mobil are to really accept this alternative energy solution and trying to profit off of something else beside oil and gas like wind. Increasing natural gas demand is something that was the driving forces factor for the company. Other than that, increasing demand from globalization is also big opportunity market emerged everywhere and company needs to really grab this before competitors do. And Exxon Mobil has improved the brand name even further by pursuing cleanest ways of doing business. And for the last one is trend. Exxon Mobil face competitors because competition is huge in the oil and gas industry. There are 4 or 5 major competitors and another threat is economic recession. Other than that, environmental regulation. At one point when it is going to be so bad that bills are past preventing them from pollution, so they have to clean up the ways to minimize pollution to abide by the rules. Lastly, social trends to pollute less and pressure from shareholders should strengthen their business if they do not evolve to the changing times. Okay, next for the recommendation. For the external recommendation, they need to continue to expand in developing market and at the same time push for cleaner energy, and the corporation keeping a heavy investment in R&D. It's good to get ahead of competitors, and they should keep pushing R&D and maybe focusing on alternative energy solution because times are changing. The company should be an expert in some field to profit off, because when all becomes obsolete in the future. Lastly, they need to supply the world's growing natural gas demand. Okay, for the internal recommendation, they need to prioritize natural gas market. Okay, next, they need to use R&D capabilities to leverage against major competitors to differentiate themselves with higher quality product and less pollution. Plus, to get a good brand image, the company should be more transparent by showing what they are doing in communities and what they are doing to help the environment. Lastly, they should look into alternative energy solution beside hydrocarbon, because hydrocarbon are notorious for pollution. The company really needs to prioritize natural gas, but also look into wind energy, because wind energy is the technology that can diminish the pollution factor oil fueling the world. Strategy implementation. A genuine investor, they will use this EPS as one of the fundamental indicators to invest. They will see the potential of a company based on the higher the EPS value of a company. The better the performance of the company from the perspective of investor. From the Exhibit 7, the earning per share or EPS of Exxon Mobil is $9.47, which higher than BP company but lower than Chevron. However, Exxon Mobil's EPS value does not far behind the EPS trend for the past 1 to 2 years. It's also not much different and is always consistent and shows progress. It shows on the Exhibit 5 where earning per common share in dollars is in 2012 is 9.70 and in 2011 is 8.43. Exxon Mobil is a long-standing company with solid finance and a solid track record in the market. They prefer to keep their financial strength. It has a strong credit rating that allows it to meet its financial obligation. Exxon Mobil has a well-balanced portfolio of project, assets, and product, ensuring that its scales, diversity, and quality are unrivaled in the industry. It encourages adaptability, potential expansion, and great operational and financial success. Strategy evaluation. The 4 perspectives of the balanced scorecard. Okay, for the financial perspective of Exxon Mobil had 2 basic levels. First, revenue growth and productivity. The revenue growth strategy called for Exxon Mobil to expand sales outside of gasoline. In terms of productivity, Exxon Mobil wanted to slash operating expenses per gallon sold to the lowest level in the industry and extract more from existing assets by reducing the downtime and its oil refineries and increasing their yield. Okay, for the customer perspective, the core of Exxon Mobil business strategy was customer value proposition, which described the unique mix of product and service attributes, customer relations, and corporate image that the company offers. It defined how Exxon Mobil differentiates itself from competitors to attract, retain, and deepen relationship with targeted customers. Okay, for the internal process perspective, Exxon Mobil's internal process objective included building the franchise by developing new product and service, such as sales from convenience stores, enhancing customer value by training dealers to become better managers, and by helping them generate profits from non-gasoline product and service. Okay, lastly, for the learning and growth, Exxon Mobil identified that its employees needed to gain a broader understanding of the marketing and refining business from end to end. Additionally, the companies knew it had to mature the leadership skills that were necessary for its manager to articulate the company's vision and develop employees. In conclusion, Exxon Mobil has a strong research and development foundation, as well as vertical integration, product diversity, economies of scale, and operational excellence. Exxon can deliver value to its customer and acquire a competitive advantage thanks to its business level strategy. Exxon Mobil is putting its internal resource to good use in order to generate success. The combining effect of people, updated innovative technology, procedure, and workflow creates the key of corporate value. Exxon Mobil is making good use of cash, time, and well-balanced mix of human and machine resource. They have always believed in technology and innovation, which has resulted in cutting-edge tools for the organization. Okay, that's all from me. Thank you.